What? You can actually reduce your tax by 19%? Hello tax fam. So we deal with a lot of contractors, consultants, and small businesses. If you're in the industries of IT consulting, engineering, management consulting, medical services, or locuming, or being a doctor, you would have heard of the term personal services income before, or maybe the 80-20 rule. According to the Australian Taxation Office, the ATO, personal services, which is PSI, is income produced principally from an individual's personal skill or their expertise and their labor. The main point of personal services income is that the ATO is trying to recognize if the income should be attributed to the individual themselves rather than the business or the company. As you should know by now, the Australian taxation system heavily favors small businesses. The tax rate for small businesses is relatively low compared to other entities such as individuals. The PSI rule exists to prevent individuals from changing the way they derive their income personally and using different structures such as a company to possibly maybe reduce their income tax. Here's a quick example. If you're an individual who earned $250,000 a year on a wage with ABC Pty Limited, your income tax rate would be 45%. However, if you set up a small business, such as a company, and instead earn $250,000 a year on a consulting contract with ABC Pty Limited, the tax rate of that company that you've set up is 26%. You could be saving 19% in taxes every year. Sounds too good to be true? That's where PSI rules come in and ruin it for everyone. The PSI rules exist to prevent people from doing this exactly. Basically, if you have PSI income, you must attribute all the income you have earned from PSI to yourself only. This means that the income must be reported in your personal tax return and you have to pay the tax on it on your personal tax rate. And if you earn a lot of income that year, you could be up for a 45% tax rate. If the personal services income rules apply to you, there will be limits to the deduction that you can claim against your income as well. When the PSI rules apply, you cannot claim deductions such as rent, rates, land taxes for your home, and even payments to your spouse for non-principal work such as like admin work, not claimable. Even your super contributions for your spouse is also not claimable. Generally, if you earn personal services income, the PSI rules apply to you will put you back in the same position as if you were an employee for tax purposes. If the PSI rules never existed, basically everyone would be setting up companies and trying to access a small business tax rate of 26%. Like who wouldn't? Unfortunately, it does. And however, if you earn PSI income, it's actually not over yet. There are a set of rules you can meet which consider yourself as a personal services business. If you're a personal service business, then in the ATO's eyes, you're still running a business, and the PSI rules do not apply to you specifically. There is a 4-step test that you must meet. This is known as the Personal Services Business Test. Basically, if you're considered a personal service business, then the PSI rules do not apply and you don't need to worry about those excluded tax deductions and receiving all that income in your personal name rather than in the company. You can pay the tax at 26% if you're a company. How great is that? Okay, a quick keynote. This generally gets quite confusing when I explain PSI. So when I say PSI rules do not apply, it's a good thing for the business. So here goes. There are 4 steps in this test. Step 1, have you received PSI? If more than 50% of the income received is for your labor, skills, or expertise, then you have earned PSI income. If yes to this question, you must go to step 2. If no, PSI rules don't apply, so there are no changes to your taxes. You can enjoy the lower tax rate, and that's a good thing. So let me give you a quick example of income that does not apply to PSI. Income such as selling materials or hiring out equipment or goods or services, those are not PSI income. All right, step 2. So the results test. Are you being paid for a specific result? Do you provide your own equipment? And do you need to rectify the mistakes at your own expense? If it's a yes for all 3 conditions, for 75% of that income that you've earned, then you pass the results test and the PSI rules don't apply. That's a good thing. If no, and you only meet one or none of those conditions, move on to step 3. Generally, in step 2, IT consultants and contractors do not pass this test and must move on to step 3. This is because they do not meet all 3 conditions, especially when they use the customer's equipment and their office. Tradies like electricians, painters, and plumbers, most of the time, they meet the results test because they meet all 3 conditions quite easily. Now let's jump on to step 3. Step 3 is known as the 80-20 rule. If you get to this step, you then must pass step 3 and 4 in order for PSI rules to not apply. So here's the test. Less than 80% of your income must come from one client only. If you meet this, then go to step 4. If 80% or more comes from one client, then PSI rules do apply and you can't claim certain deductions and you must show all the income that you've earned personally. Not a good thing for you at all. Step 4, the remaining tests. There are 3 remaining tests and you just need to pass one of these tests for PSI rules not to apply. So the 3 remaining tests are unrelated clients tests. You have 2 or more unrelated clients and you offer those services to the public. Employment tests. You employ or contract others to provide services to your clients. And finally, the business premises test. You have a physical business premises separate from your client and separate from your home. And that's it. If you pass step 3 and 4, then you're a personal service business and the rules do not apply to you, which is a great thing. The way the tests are laid out, it's quite confusing, so I hope it all makes sense. The main points you need to know is your income PSI? Or are you producing a result rather than selling your labor or skills? Are you running a proper business where you have multiple clients, hire employees, or have business premises? All right, now let's go to some real examples and apply the PSI business tests. Let's first start with Dave, the plumber. He's decided to be a contractor and set up his own PTY Limited company. In step 1, we can clearly say more than 50% of his income is received for his labor and skills, so he has earned PSI income. In step 2, Dave invoices once the work is done. He also needs to rectify any defects on his work at his own expense. Dave also brings his own equipment and tools to all jobs as well. As a result, he passes the results test in step 2. So the PSI rules don't apply and it means he enjoys the 26% tax rate for PTY Limited companies. He does not need to attribute the income he earns to his personal tax. He also gets to claim all tax deductions for small business owners. Here's another common scenario. Shirley, the IT consultant. Shirley has been working as a permanent employee and has decided to become a contractor as the income and flexibility is more attractive for her situation. Shirley set up a PTY Limited company and she normally takes on contract jobs that last 3 to 6 months. In the 2020 financial year, she had 2 contract roles. One job that made her $150,000 a year and then the other one made her $50,000 in that year. Let's apply the PSI business test. Step 1, did she earn PSI income? Yes, she did, as she has exerted her skills and labor per hour to do the work as required by the client. So we must move on to step 2. Step 2, the results test. We've had a read of Shirley's contract with her clients and there's no requirement for her to rectify her work and she must work using the client's laptop and their equipment. Since she doesn't meet all the conditions in the results test, she does not pass this test and needs to move on to step 3. Step 3 is the 80-20 rule. Shirley has 75% of her income from one client and 25% from another client. She meets the 80-20 rule, meaning less than 80% of her income only comes from one client for that financial year. However, she must also meet one of the remaining tests in step 4 to pass. Let's look at the 3 remaining tests and apply it anyway. But note, we only need to meet one of them out of all the 3. You can meet more if you want, but just one. Shirley has 2 clients. One is with a large corporate bank and another is with a small startup business. Both businesses are not related to each other. Shirley also looks for new contract work on her own and maintains her own website. As a result, she meets the unrelated clients test. In test 2, the employment test, Shirley performed all her work herself during the 2020 financial year, so she would not meet the employment test. In step 3, the business premises test, in the contracts, she was able to work from home and at the client's premises. Her business did not take on any physical offices during the year, so in this case, Shirley will not meet the business premises test as well. However, since Shirley passes step 3 and also passes one of the remaining tests, the PSI rules do not apply to her, which is a great thing. As you can see, the tests are here to see if you're running a proper business and not just trying to convert your wage income to a business so you can get a better tax rate. There are huge tax savings if the PSI rules do not apply to your income, but it's best to speak to an accountant so you don't get it wrong. The PSI rules have been notoriously confusing to navigate. I've had many clients just not understand it at all. You have to be very careful with PSI and ensure you're not participating in an illegal tax arrangement to obtain a tax benefit. If you found this helpful, don't forget to leave a like on the video and subscribe to the channel for more helpful tips for accounting or running your business. And if you have any questions or you want me to cover any specific topic at all, leave a comment below. Thanks everyone, see you next time.